Good evening. Am I visible or not? Today is our discussion about the economic survey. You know, there is a lot of value in the economic survey. After reading everything of economics for the exam, luckily for you, to refresh your knowledge, to update your knowledge, to consolidate your knowledge, you have the survey around the last few days of the Jan month, like it was on the 28th of last Jan, so that you are as close to the exam as possible. The data is the latest. And for revision, there is tremendous interconceptual linkages. And the themes they throw up are also quite illuminating. So today I have chosen about 35 paragraphs from the economic survey. Be it the overview or the fiscal or the monetary or balance of payments or inflation, what have you. And of course, the other volume where they talked about innovation, they talked about, India's sovereign rating doesn't reflect its macroeconomic fundamentals and potential, etc., etc. You will see all that on the screen as we keep discussing. So I must tell you, yeah, this is the theme. Only exam, please. Only exam, because see, we have no other purpose in our mind. We have only exam in our view. There's so much in the survey. They are policy makers. From what they present in the survey, very little is useful to you for the exam. And all kinds of details we are not here to show off. I'm not here to show off. Whatever I utter today in the next 2 hours, I should have exam utility. One level or the other of the exam, it should have utility. Otherwise, I'm wasting my time, I'm wasting your time also. So, survey is conventionally presented a few days before the budget, a day before the budget, or 2 days before the budget. That depends. If you have holidays around maybe 3-4 days before the budget, union budget. Chief Economic Advisor writes it, guided by the Honorable Finance Minister. He has a tremendous research team. They all work together. They pick a theme and they elaborate. They also talk about what is vital for public policy, be it deregulation or Adam Smith, markets, what have you. And it's presented it's tabled in the parliament. And whoever wants to study can study. A little bit of that can appear in the budget also the very next day. Little bit, very little bit. And newspapers talk about it. People analyze. Some people appreciate. Some people criticize whatever they feel their response should be. For us, as I told you, we have to search in the survey for what applies for our exam purposes. And so I have scoped certain aspects of the survey. Otherwise, what does the survey talk about? There is corona, there is attack on the economy, there is unemployment. And then we did whatever we did, Atmanirbhar, monetary, this, that. And in the process, we shaped recoveries there. But remember, the survey also talks about it's not that we are out of the woods. It's possible that a new strain, a new variety could come, double mutant, etc., that we have here. And the distribution and administration of the vaccine also is very vital. All this they talk about, though not very prominently, tucked away in some paragraph somewhere deep inside the survey, but they do talk about it. So, you have read hundreds of articles about what happened to economy and how we recovered and so on and so forth. So that's not what we are here to discuss. We already discussed it over a full 1 month period, threadbare, you know. So we are not here for that. I have, as I told you, chosen certain aspects and some terms they have used. If you use, maybe that will give you an edge, etc., etc. So let's get cracking. We are not in a hurry. I'll give you enough time so that you could come into the discussion also. So let's get started. Slide number 1. They have used a term called hysteresis. You know, this is the term they have used, hysteresis. In this, see, so that you can see it clearly, this hysteresis. You know, there is a crisis. There is a downfall in the economy. A lot of people got laid off, and there has been a hit on the demand and supply. All that happened, and you know, we have seen like never before the sort of destruction of economy. You will never see it again, God willing, nor have you ever seen it. Now, the point about hysteresis is the factors that have caused the economic crisis or the consequences of the economic crisis will persist even after the economic crisis has been resolved. Take, for example, a lot of people who are laid off. Our hearts bleed for the people who are migrants. They are again back in the trains, you know, completely lost and despondent. All of them lost their jobs. They are going back. Tomorrow, today you talk about V-shaped recovery. It's inevitable that you will come back in a V-shaped recovery. We'll talk about all those alphabets down the line with the help of slides. Even after you have recovered, hopefully we'll recover. Someday we'll recover. We haven't yet recovered. It's expected that in the current fiscal you will recover and be pre-pandemic in your growth. Even then, tens of millions of the people who have lost their jobs, they have gone back or wherever, you know, the unemployment will persist. And because of the unemployment, the decline in the demand will persist. And because of the decline in the demand, you know, that side, the human side of it is there is poverty, undernourishment, and you will have a decline in the human development standards, etc. All of them will outlast the crisis even after the crisis has been resolved. Tomorrow, it's possible, okay, you'll come back at 12% rate of growth because that is what is V. You lost that much, you lost about 7.5, 8 or whatever, and you'll come back with all that. Inflation adjusted about 15. That doesn't mean all the people who were employed will be employed. That doesn't mean all the MSMEs that got destroyed will come back. So, even after the crisis is resolved, the consequences of the crisis, for example, poverty, inequality, unemployment, they will still persist. Who knows? There will be automation to respond to be ready for another crisis like this. Automation means disemployment, etc. So that is the meaning. I'll give you the PDF. Don't have to write at all. The PDF is ready and I'll give it to you. That is the meaning of hysteresis. That is the consequences of a crisis will outlast the crisis. That means even after recovery, they'll continue to be there. And the standard example given is, of course, the unemployment. That is the result of a recession. Now, they talk of 2008 recession also, and after 2008, you never really got back. Even while you got back the growth, the after effects like under unemployment, etc., they have never been resolved even in the advanced countries. Part of the reason why they are in ferment now, racism and all sorts of things. So that is hysteresis. I thought maybe you could use it in your main examination. Or who knows, the man who wrote the survey, if he sets a question for you in the prelim, who knows, maybe he'll give you. But hysteresis is a little technical for the preliminary, but who knows, we know nothing. That's about hysteresis. I thought I'll discuss it with you in the context of the pandemic infested economy. We can go to the next slide. Yeah, you see, we talk of business confidence, consumer confidence. Now, how do you assess the business confidence? You know what you do? Call up all these managers, purchasing managers. They are the ones who purchase all the inputs. You know, ask them, how are the order books? If they say fine, better than last month, last year, whatever, then the PMI is doing fine, above 50, it's okay. And you have that for manufacturing, you have that for services also. Services PMI, it's not done by the government, it's done by a private agency. So PMI, if the examiner asks you what is PMI, you say it is calling and asking how are the orders, and depending on that, assessing. Once the orders are good, that means there is demand for goods and services, and people are investing. So business confidence and the consumer confidence are back. So I thought this could be the next level of your preliminary, etc. And of course, in the interview, they could casually ask this, because on that day, if it figures in the exam, they will certainly ask, because it's simple to ask. Whatever is very simple to ask will be asked. And that's where we are about the purchasing managers index. Can we go to the next? Dolex, I thought this is important. This is important because, see, stock market, you can ask analytical questions. Stock market, you can ask, the stuff like, why do stocks go up and why do they go down? Some general sort of answers can be given. But this is technical. Dolex. Okay, I'm getting $1 into your country, into India, and I'll convert that at 74 rupees or so. And I will buy a Reliance share. I bought the Reliance share at 74. It has become, it has become 80. And I checked into your country at 74 per dollar, at 74, and it's become 76. So I gained on the dollar $2 on 74, and I gained on Reliance 6 rupees on 74. So Dolex tells me how my investment fared, both by way of investing in foreign currency and also investing in a share in the stock market. So my Dolex will show, accordingly, 6 on the share and 2 on the currency, and there'll be software that will convert to what extent I have gained. But on the other hand, if Reliance fell, God forbid, and rupee appreciated, I'm not a fan of appreciation beyond a level. So there again, you got 74, and now the rupee appreciated, so it goes against you, 72, 73 and all that. So Dolex will tell you the value of what you have invested in terms of not only the change in the price of the share, but also in terms of the change in the price of the currency. That is a Dolex. Bombay Stock Exchange operates this. So I'm sure this is the concept. This is the concept. Dolex 30, 30, of course, the sensitive index, Sensex, has 30 shares with the differential weightages, together making 100 in the base year. That was 1979. And today, of course, is 2021. What was 100 then, today is about wherever it is, quite very, very high, somewhere 50, around 50,000. That's the journey of India's economy. As the share prices grow, you move from 100 towards 1,000, 10,000, etc., etc. All of you who must have watched Harshad Mehta, the Amazon, you will love all this. So that is the dollar linked index, Dolex. I'm sure you are clear about it. To tell the foreign investor what's been the change in the fortunes of the investment by way of the price of the currency, that's a home currency, our currency rupee, and also the price of the share in which he has invested. That's $X30. I have scooped all this from the survey. Survey, as I told you, is important for facts, for what it mentions, and for all the interconceptual connections. So I try to do justice to all that. So this is $X30. I hope it's clear to you, and I'm sure you will sort of type in your questions in the chat box. If you have something to ask, you are most free to do that. Yeah, thank you. So, the next slide. Yeah, you are waiting for all this. You see, V-shape, U-shape, swoosh, that is the Nike, the tick mark, Z-shaped, W-shaped, L-shaped, God forbid. V is what we are going through. You fell and you are, rising as fast as you fell. V. V is very simple. Don't think that it is extraordinary. It's not extraordinary at all. You fell. This was your pre-pandemic level. You fell and you got back to where? Pre-pandemic level. So 1 year to fall and another year to get back to the pre-pandemic level. So no miracles here. And on a base of, if this is the base, you got to normal, and reaching normalcy, recovery of normalcy is what is called V-shaped. And you know what happens? In U-shaped, you fall and you recover slowly. Look at the curve here. Slowly, it takes you 3-4 years to get back to the normalcy. And here, you know, you fell like a knife and you get up as quickly. And this Nike, yeah, some kind of, this is another shape, the swoosh. And Z, I don't want to talk of, actually remove this. Remove this swoosh and Z. We are comfortable with V, U, W, L. And of course, in this year, this alphabet K is, getting popular. I'll explain that. You know V, you know you. W, okay, you fall and you get up because you've done Atmanirbhar and you've done stimulus, you've done Indian infrastructure pipeline, all that you've done, and you get up. But remember, it takes a little more than what you have done to be there. And so you could not sustain your debt. Remember, the survey 21 talks about debt sustainability, growth and debt sustainability. We'll come to that. So you fell, you spent your way out back to normalcy, and then again, you can't keep borrowing because whatever you spent on the food you gave, the money transfers into the Jan Dhan accounts, and all the, Narega expanded coverage, etc., etc. All that doesn't fetch you any sort of economic growth right away. It takes time. It'll be you. So you fell again. And after having fallen, you are scared that you'll fall further. So you have talked to the rating agencies and World Banks and IMFs and all of them. And then they said, okay, go ahead, borrow a little more. We'll look the other way. Don't worry, etc. So you borrow more and then you spend and you kick up again back to the pre-pandemic. That is double dip. It is dip, get up, dip, get up. And God forbid you keep dipping and getting up. From here, hopefully, you will whip up like this. So this is W. And then L is you are finished. You fell, and that's where you stay. You fell, and you are here. You fell. You're going this way. This is normalcy. You're going this way. You've fallen flat. So this is L, and L is also better than, I don't know if L is better or K is better. See, K is like this. K is, see, who are the guys who have made it? Professionals. These are the people, professionals, doctors and software people, whoever, and all others have fallen. Some sectors have gone up, recovered. Everyone fell. Some have recovered. Some have deteriorated. So that makes it K. And stock market, etc., etc. Some people are minting while others are sprinting away from the urban areas. So this is K. Some sectors have come back, most haven't. And so this is K. Which sectors have come back? Maybe a bit of hotels, maybe a bit of financials, a bit of course, software, etc. is always there. They have never really fallen so much. But others have fallen, construction fallen, real estate fallen, education fallen, and what have you. So some get richer, some get even more, poor. So this is a classical K, but it's never been like this before, not as stark as it is. And so there has to be some equity about it. Though the services don't talk of equity, keep growing and all that, and we'll come to that. And not too many people are sympathetic with the survey observation that growth is fine, even if it creates inequality. That is an absolutely objectionable premise to work on. So these are the alphabets. There is no other alphabet I know of. V, U, W, L, and K. K is about the growth. K is also about the, how the impoverishment of some has worsened and the wealth of some has galloped. We have more of our people in the billionaires, dollar billionaires list. So that's about A, B, and C of recovery. That is the alphabets of recovery. I'm sure you are pretty clear about it. We discussed all this. Survey has given us another opportunity to refresh our understanding. So let's move to the next slide. Fiscal response, we all know this survey has revised it for us. See, remember one thing. Down the line, we will see one more slide about the growth and debt sustainability. We know this, we call this in our class discussions, classroom discussions, grandmother's economics. Okay, you fell, and you have to come back. Private sector has scooted. No one to take responsibility for growth. You are the government. You are there for the people of the country. So the buck stops with you. But you yourself have been so hard hit. Taxes have fallen. You can't divest, and no trains, no buses, so no user charges, nothing. And you are yourself on the verge of bankruptcy. So what do? You borrow what is called the classical Keynesian stimulus. When nobody is in charge of economy, the government takes charge. And not only, economy is a very prosaic word, but within economics, you have human development, poverty, and whatnot, misery, etc. So you have to do something, and I'm glad to say that our government kicked in with all the commitment. World's largest food program, direct transfers to Jan Dhan accounts of women, government guarantee for credit. Don't worry if you can't repay the banks. Don't worry. For 3 months, you take your time, and for others, you see even more time and even more credit, more concessional credit, and expanded Mahatma Gandhi National Rural and post financial deadline. See, when the crisis hit, when there is 25% of fall in the economy, not rate of growth, it is growth itself. So from 100 rupees to you fell to 75 rupees in the first quarter. Of course, second quarter it got muted a little bit. Third quarter you bounced back, and fourth quarter you should have, even more bit of bounce back. But the fact is that you fell 25%. I mean, think of 1 year back. How was it on the April, say today 10? All the wild animals were there on the roads. You see, there was no supply, no demand, nothing, and an odd Amazon guy moving around. So financial deadlines, take your time to give the money back. There'll be no interest on interest. Supreme Court has been extremely kind, etc., etc. And then, of course, you got the production-linked incentive scheme. Today, it's operating for 13 sectors, about 2 lakh crores of rupees worth of incentives you are giving to all that. You'll see the table. Telecom gets the biggest chunk of it. You'll see the table. Now, This is what you've done. Atmanirbhar 1, that was in May, 2, that was in the middle of last year, 3 is November, and of course the budget also kicks in with lots of stimulus. So all this gave a human face to our recovery. Remember, food, Jandan, Narega, and then this credit also is human life, and then lots of employment, so on and so forth, PLI. All this you did, and the survey says that India, you know, the response that we uh, gave to the crisis, we are different. All others front loaded. They printed a lot of money and they gave grand stimuli, etc. These are survey words. Whereas India, step by step, do a little bit of stimulus. Of course, RBI kicked in right earnest in the month of March or February itself, step by step, in three-step process. And you have fiscal response, I'll come to the monetary response, and then structural reforms. This is my takeaway. Tomorrow you go to the interview, you are asked, what are the structural reforms? Superb, superb page you have in, the survey. Structural. And then survey also talks about a few other words. I would like to elaborate on that. This is the fiscal response. Classical. This is exactly what you did in 2008, 9, 9, 10, 10, 11, when the global financial crisis hit us. Now you've done the same thing. But those days from 3 to 6.5, you went in your fiscal deficit. Today, if you look at the number, it is 9.5% of GDP. Your children won't be able to, you yourself after 10 years, 5 years, won't be able to believe this was the fiscal deficit, 9.5%. But it was, the crisis was big and the response also had to be big. There's lots of interesting stuff ahead, so we are moving to the next slide. Can we change the slide? We have structural reform. See, this is the list I was talking about in agriculture. You have a big investment being promoted by all the three laws. One is about you can sell outside the APMC. Another is you can get into a contract. Still another is store as much as you want. I would like to talk about, this, any one of them actually, but the Essential Commodities Act, some doubts are there. I've gone through the Gazette again. See, what it does is, you can store essential commodities are there, 7 are there, one more is added, that is all your masks and all that, they are also an essential commodity post COVID. So it is 8 essential commodities are there. And about essential commodities, the government can regulate how much is produced and how much it is sold at, and how much can be stored, etc., etc., so that there is equity and there is access to the public and there is affordable, fair pricing also. But then see, you have to trade off. There's a trade-off between what I just now spoke of and also getting investment and cold storage and economies of scale and value addition and exports and all that. So in the essential commodities list, you have 3 types of commodities right now. One, stuff like your masks and petrol and stuff, drugs and fertilizers. The government still has the power to regulate them. Regulate unconditionally under all circumstances. And there is one more category called the foodstuffs, be it horticulture or your cereals, pulses, oil seeds. For them, there are 2 categories. For them, basically, okay, you buy up, you store up whatever you like. Store up, there is no problem at all. And we'll get into the act of regulation only when, horticulture, 100% cereals, 50% the price goes up, or there is a famine or a war or a natural calamity of a grave nature, we'll step in and then regulate so that the scarcities created can be overcome. But two types of people are never regulated. They are alien. They cannot be regulated. When this act came into being, now they can't be regulated. Who are the people? You're an exporter or you are a value chain participant. That is, value chain participant is a very vague word. Everyone's a participant. Who is not a participant? But to sort of simplify, I could tell you, I have a plant, I make mango pulp, and I have the capacity for 1 lakh tons or whatever. And up to 1 lakh tons, I can store. And you cannot check me. If I store as much as I have the plant capacity, you cannot check me. Whatever the inflation, whatever the calamity, even if there is a war, you cannot. If I'm an exporter or a value chain participant, there is no way essential commodities act can kick in on me at all. So why have you done? I told you lots of investment and cold storage. If I can't store, why will I invest in storage? Why will I go for cold chain? Why will I add value? Everything is paralyzed if I cannot, respond to economies of scale and the relevant demands. Now the point is, you will all be wondering what the hell is going on. Won't people buy up and store? What will happen? We have to wait and see. But the point is, we are in surplus. Almost about 300 million tons of food grains you are producing. So much wastage is going on. By these reforms, if the wastage of fruits and the vegetables is cut down, 25% or 20% is the wastage, then you have it's a win-win. Win for the consumer, win for the producer, and win for the economy, and win for the investor. Now you will ask me, that's okay. Now, how will these guys be regulated at all, the exporters and the value chain participants? Services. I think it's a survey that says, yeah, services. That, you see, you can, if you are short of any of these items that have been taken out of regulation for all ordinary purposes, you could import. You could stop them from exporting. I've got an order. Can you stop me from exporting? You could, because that's what the survey says. So by making changes in the trade policy, you can create conditions for equity and affordability at home. Don't switch yet. Go back, please. Yeah. So, agriculture is a structural reform. The structure of marketing, which is a very vital dimension of agricultural reforms, has been revamped. And how? This is completely, you can't recognize. What are these reforms? What do you call them? Tectonic. They're not even structural. They're tectonic reforms. MSME, the artificial distinction between manufacturing and services. And you also know that earlier it was by investment in the equipment and so on. And now you have moved it to turnover, because investment is, it is wrong for two reasons. Number one, investment itself is no proof that there is production, turnover, sale, profit, etc. And also, I want to be within the investment limit, and therefore I will not invest, and I'll not technologically modernize. I will not push up my productivity. I will not, in that sense, be more profitable. So scrap the artificial distinction between manufacturing and services, and also, bring in investment as the basis for definition of MSME and entitlement to benefits like credit, technological modernization, and so on and so forth. That's another major, uh, structural reform. Next one can be labor reforms. Labor reforms also, minimum wage, the center sets, and from 100 to 300 you have gone before you have to ask the government for firing. And then you got fixed term employment also, and you've got the gig and the platform people for enjoying the social security. Lots and lots of help for the domestic workers. Are they structural reforms? The survey calls them structural reforms. But I think they are incremental reforms. I don't think they are structural. From 100 to 300, would you call it structural? It had to happen. As you grow up in scale, as there is volatility, you need to give flexibility for the employment policy to the corporates, otherwise there won't be investment. And you thought you'll protect the labor, but you are working against the labor because you are not able to employ more and more people. That's okay. I don't think they break new ground. They are sort of marginal reforms. This, but since the survey calls them structural, why should we call them anything else? This is a very, very big reform. Remember, 240 central public sector enterprises are there. 1,000 state public sector enterprises are there. You call some sectors strategic. In that, you barely exist. One company of yours will be there, one unit. Up to four you can have. All others privatized. Privatized. Some people say finance minister is the first person to, the honorable finance minister, that is, our finance minister, she is the first one to talk of privatization budget speech. No. In 1999, Yashwant Sinha, then finance minister, he used the privatization word for the first time. He was the same Yashwant Sinha who used the word disinvestment for the first time. 1991 interim budget. So she is not the first one. Sinha was the first one. That's okay. That is silly. In non-strategic sectors, you don't want to have even one public sector unit. Go to sleep, wake up and see Indian economy and the public sector. You won't be able to recognize it. Only in strategic, for example, defense or whatever else you call strategic, you will be there. Otherwise, there will be privatization. People were shuddering to use the word. They were talking of divestment and so on. Now you have glorified privatization. This is the ultimate structural reform you can think of. That is your PSU reforms. Production linked scheme, that's okay. Come, make in India, invest in India, and then, all the cutting edge areas where today we are import dependent. Your dependence was starkly exposed during the pandemic, be it for medicines or so on. Ports were not working, ships were not working, you could not import spare parts, you could not import finished goods, you could not import. And therefore, the Honorable Prime Minister said, let us have the entire production base within the country. So I'll give you incentives, tax and others, whatever incentives I will give you, and you produce in the country. And what are the advantages? Whatever you can think of is an advantage. What is not an advantage here? You get investment, you get foreign currency, you get competition, you get a place in your regional and global value chains. You have, the upstream benefit for the input suppliers, MSMEs, what have you, employment and assemble in India, that is also, and this is exclusive manufacturing. There's no service sector here as of now, be it telecom, mobile, textile, steel, today you got the news, all these LEDs and white goods, what have you, and batteries, etc., etc. Is that a structural reform? We have had schemes like this, honestly, where you give benefits for investment, tax benefits, etc. You force me to call it a structural reform. I can. Is it extremely beneficial? Of course. Is it a game changer? Of course. Is it structural? What is so structural about it? It's not structural. The next one, of course, is structural. Corporatization of Ordnance Factory Board, a lot of private sector people, and they can add a lot of value. FDI limit in defense manufacturing, automatic from 49 to 74. This is structural because we are seeing the, sanity in our policy because, while the Honorable Prime Minister wanted to crack it open, long time back, there was public opinion against it, sentimental and all that. The crisis has become an opportunity for us to open up the defense. People will come, make it in India. Russians will come. Everyone will come, make in India, and we will one day make our own defense goods. Not only that, we will also be exporting like your BrahMos, etc. The day is not far off when you will yourself be a big player in the arms bazaar in the world. So these are the structural reforms. Let me see if more is talked about. Can we go to the next? Okay, see, somewhere else, actually, I deleted that in our slide. In the survey, it also talks about space reforms. You can talk about that. Your National Space India Limited, or there's one agency and there is one in space, and both of them have to do with transfer of technology and involvement to the private sector, and that is fairly big. Yes, space reforms are also big. These are all structural. Space is structural. Defense is structural. MSME is structural. Public sector structural. They are all structural reforms. Make no mistake about it. Absolutely structural. They change the structure of the economy. And the RBI has come out the winner in the entire process of resolving the crisis. All this they have done. Durable liquidity, open market operation. Go into the economy, buy the government bonds and infuse the liquidity. And state development loans, state development loans are the state bonds that the RBI sells in the open market. State bonds are sold under the banner of state development loans. There is no such operation for term for center. You call it OMO, open market operation. SDL is about the state bonds. And then you want lots of money at the repo rate, which is dirt cheap. Today, the repo is 4%. You want at that rate for 3 years. Never mind, I'll give you. Take the money, lend, revive the economy. Long-term repo operations, 1 to 3 years. Government bonds are, I'll give you the money. Keep your bonds with me. And you want to lend it to specific sections like real estate, auto, etc. Targeted long-term repo operations. Those companies are floating bonds. You put your money there. They'll get the money. They'll survive. Now, what are the advantages? Lots of advantages. Revival, investment, everything. They won't go bankrupt, etc. But there is also one more advantage, which is, people in a crisis sell bonds. I'm not sure if you'll be able to give me money after 2 years, 3 years. So let me sell and run. But the RBI says you can keep the government bonds with me, the stuff that you have above the SLR, and I will lend you for the TLTRO and LTRO with that. So people stopped selling bonds. Actually, they started buying bonds, and the yields stopped rising, and the yields fell, that is. So that's another advantage. And the CRR got chopped to 4%, after that 3%, now to 3%. But yes, it's creeping back to 4%, and from 3 to 3.5, somewhere this month. And next month, 22, May 22, it'll be back to 4, because too much of liquidity can also be, it can lead to non-performing assets, it can lead to inflation, and it can lead to general loss of confidence, etc. And marginal standing facility, okay, earlier I gave you the permission to dip below SLR, which is 18 to 2 percentage points. Now I'm saying 3 percentage points. Don't you worry, come to me. Dip into your SLR bonds up to 3% below 18 and come to me. I'll charge you a little more than this repo. Today it is 425, 4.25. But still money is there. I'll make it available to you if you want. Not that the credit grew on the back of all these reforms. It did not grow. But still RBI did what it had to do. It helped out the NBFCs. It helped out the, the mutual funds, special liquidity facility. Because all those people who bought the stock suddenly when the market fell from 40,000 to 26, 27,000, which is almost about 1/3, then all of them were on the verge of going belly up, and RBI had to rescue them, because Everything rides on the stock market. There's nothing outside the stock market in a modern economy, directly or indirectly. Everything is linked to the stock market. And so the RBI had to bail them out by a special liquidity facility. Mutual funds and all India Financial refinance. Give them money, they'll on lend. NABARD will lend to farmers, NHP will lend to the guys who will buy houses, SID-B to the MSME. So all this they have done. RBI did all this. And that is why in one of the slides, which is going to come up, you will see the characterization of our stimulus as not merely borrowing and spending, but also liquidity support. Liquidity support. Don't have to give me money free. Don't have to put money in my account. Help me to float by lending me cheap. So liquidity support to the MSMEs and everybody else, and deferment of the, what they call forbearance. That is, you don't have to pay me now, take your time. That itself is a lot of relief. And 75,000 for the all India financial institutions, and about 50,000 for the mutual funds, and a lot of money for the NBFCs. And you told the states, CSF, Consolidated Sinking Fund. I'm coming to that. That could be the next slide. We'll see that. So all this, RBI has been a master in crafting a plan for quick and durable recovery. All this is terrific. Something should strike in the examination, I have no doubt. Facts are here, analysis is here. You stretch it and shrink it, and you'll get it right in your prelim. And if we can go to the next slide. Monetary policy transmission. This is what I liked. Okay, you've been able to, you're making lots of reforms. Repo, you've been slashing down to 4. CRR, you slashed to 3. A lot of rate cut is there, a lot of cash is there. Is it going to the guys? Are you able to lend? Are you getting people to take? Now, that is called transmission. So when you cut the rate, people are tempted. When there's a lot of money, banks are tempted to give. Sort of look the other way. Don't be too rigorous in the due diligence and be accommodative, etc. So rates are cut. There's more cash. But there's a liquidity trap. Nobody is taking it. And that's okay. We'll come back to that. Somewhere down the line, it'll come. External benchmark. See, earlier, okay, all of us have studied this. Base rate you introduced, then you called it MCLR, marginal cost of funds lending rate. Even that did not work too much. Therefore, what did you tell the banks and the NBFCs? Brothers and sisters, when I'm reducing the repo rate, link your floating rates for all the consumers and housing and others. Your floating rate will be linked to the repo rate straight. Nothing gray here, black and white. So that also ensures that there is transmission. How? Everything is transparent. The rates are down. And you could lend. The rates are down. And they're down for all. They're down for the people who deposit. They're also down for the guys who take money from you, borrowers. So because of the transparency in setting the rate, and because of the rate cut, because of lots of cash sloshing around, all of them together conspired to allow transmission of the monetary policy. I like this part. Tomorrow, if your MCQ is this, all the above or whatever, 1 and 2 only this and that, I've just quoted from the survey. All the 3 are instrumental in, pushing the transmission around. Let's go to the next one. Yeah, this is, we need to be sort of clear about this. Above the line and below the line government expenditures. This is the jargon of the International Monetary Fund, but a classical question of, I think, preliminary review. Of course, it's a very casually asked question. What's above line? What's below line? See, okay, I borrowed 100 rupees and spent on a road above line. I told you guys don't pay the tax for a while, and or you, instead of 20%, you pay 15%. That is above the line. I've given you a tax break. I've given you a tax concession. That is above the line, straight out. And it will give you consequences on the fiscal multiplier. See, I ask you not to pay the tax for a while. I ask you to pay a little less. That money is surely, it may not be so surely, but yeah, there is a chance that you'll spend it. That'll revive the economy. Classical Keynesian stimulus above the line. Below the line can also push you towards, some sort of stabilization. What is below the line? I'll stand guarantee. Okay, if my company is going to raise money, they want to borrow 20,000 crore. I'm the central government. I'm the I'm the party that will guarantee this. Counter signature is mine. So that is also a commitment from my side. It will also reflect in the budget. Sooner or later, it could come back and haunt me. But for the time being, I'm only standing guarantee. Or Air India, I have given them 10,000 crores of rupees of equity so that they could fly around a little more. So all that will not, tomorrow they'll haunt me, the day after they'll haunt me. Right now, that equity may not even be material. That could just be, an accounting trick. But still it'll work. Market will look at it differently, etc., etc. So above the line, below the line. This is, some of these words I have taken exactly from the survey. Some, of course, not, because the survey only quotes the IMF vaguely. But I've gone to the IMF website and borrowed from there, etc., etc. So above the line, below the line, if you use these terms, you will stand apart. I have no doubt about it. Prelim, a question can come. Main, you can use to stand apart, and interview another casual question. All of them add up to quite a lot of performance on your part. So there we go about the above the line, below the line. Keep looking for more examples. I would like to have more examples of this, but when we give example, it should be black and white, standing guarantee. You're not spending 1 rupee, but it could come back to take a toll on your finances tomorrow. That is below the line. And if you want to take liberty, you could say the government wanted the FCI to borrow, and it did not show in the budget numbers. That is below the line, because you had to do the borrowing. You did not borrow. You allowed the FCI to borrow. Of course, from this year, it is closed now. There is no, as far as FCI is concerned, there is no off-budget expenditure. You could call that also below the line, but don't take chances, because a public finance expert on the board could be a stickler. He won't appreciate your creativity, imagination. He will say you're actually in the gray zone. Say standing guarantee, and here straight out borrow and spend, and also give tax concessions above the line and below the line. And yeah, we can go to the next. The next slide. This is I think this is a pretty bang on, exam friendly question, this one. See, please understand. We have not been the best performers on the fiscal front. For a while, we've been slipping and sliding and encasing and this and that. So we are nowhere near the disciplinary numbers. Now comes the pandemic. If you were okay pre-pandemic, during the pandemic, you will get lots of headroom. But whatever room you had, you already over-exhausted that. Now, if you had printed money, your rating could have gone for a 6. And the government was told in black and white terms that you cannot print too much, and because you don't have the space, fiscal space, maneuvering space. Therefore, what happened? You had to be innovative, imaginative, and you had been. There's no doubt about it. So what happened? You borrowed a little bit and spent on the fiscal response, I told you, but the brunt of the action was in the hands of the RBI. I told you mutual funds helpline, NBFC helpline, All India Financial Institutions helpline, cut the CRR. SLR you didn't touch. It's been 18%. And repo, you brought it down. That marginal standing, you brought it down, and lots of OMOs. So what have you done? You've not printed too much, but you made lots of money available. And where was this money coming from? A lot of people were coming into the country. They brought dollars. You bought dollars by printing rupee, and the rupee was there. That rupee was allowed to be there in the market so that it could be lent to whoever wanted, if they wanted. So net, the money you borrowed and spent on all sorts of things, be it welfare or infra or whatever, was limited, unlike America and elsewhere, where they did quantitative easing, fresh money being printed and so on. And now you haven't done that. You printed some, but you infused a lot. Infusion is not printing. You printed for something else because of dollar, etc. You infused it into the market, etc. That's brilliant, absolutely brilliant. You can't question the brilliance of it. Yes, necessity is the mother of invention. You could not print and you had to maneuver around, and that is the compulsion that made you creative. That's okay. So that is the liquidity infusion, fiscal expenditures. So, but a lot of people say this is, if I use a strong word, they say it's a deception. If you putting money in my account as a DBT, the basic income is one thing, but giving me money cheap, 2%, 3%, 5, 6%. You see, borrowing is borrowing, getting it free is getting it free. A lot of people, all the people, the Nobel and, beyond the Nobel, like Raghuram Rajan, etc., all of them said, print, print, print. This is not the time to think you're in the ICU. But the government taught, the print walas, they call them the basic income walas and all that. There are two schools of thought that emerged. One said, infuse liquidity, spend on infra, etc. Another said, print, now is the time to print and make every other policy fall in line with printing, and that is demand and supply, bring them in line, etc. But the government did not push too much money through the DBT. So that is why you call that fiscal stimulus plus liquidity infusion. If you call this, you are the winner. Even in the interview, this is going to figure quite, often. I feel so because this has been the constant refrain about how we handled our economic crisis. So we move on. Next one. Yeah, this could be another candidate for the prelim, whatever, main also not prelim. See, so, states are at the cutting edge. They have the developmental responsibilities, food security, human development, health, whatnot, all of them they had to do. But their economies had tanked with the rest of the country, and they were not even initially paid for GST compensation, etc., etc. But RBI, again, I'm amazed by the agility of RBI to respond to the crisis. What did RBI say? States, this ways and means advances, I'll give you a little more. See, there are two funds here, which, as I told you, could be the candidate for the exam. All this, the trigger, of course, is the survey, consolidated sinking fund, guarantee redemption funds. States have them with RBI. Every year you put in some money. They started in 1999 and all that, that's history. We are into concepts here. So, what the RBI said is, okay, no, please go back. No, before. Yeah. So, these are the two funds that the states, every state has with the RBI. Is it compulsory? More or less compulsory. They have it because you tell the RBI, sir, you go out and float my bonds under the SDL and borrow for me. Then the RBI would like some guarantee that, the borrowing is by the RBI and they don't want their credit rating to go down. They don't want the state credit rating also to go down. Therefore, the RBI would like to fall back on something. So they told 21, 22 years back, you have a consolidated sinking fund, each state, Kerala, Andhra, Delhi, whatever, with the RBI. Into that, you keep putting some money. Let that build up to a certain level. I'll give you interest, you don't worry. And tomorrow, when you have to amortize, that is repay and also pay interest, I will use this. So I have some comfort for borrowing on your behalf in the market. Otherwise, you and I both will sink. So consolidated sinking fund that the states have. What is the guaranteed redemption funds? States have a lot of public sector units. They go out to borrow, and those loans are counter guaranteed by the state government. And in case push comes to shove, you have to pick up the bill. And if they see some money in the guarantee redemption fund, there is greater comfort about lending to those public sector enterprises. So why are we talking about it now? We are talking about it because you got your money in the consolidated sinking fund that you have with RBI. You can borrow some money from there. The rate of interest charge is 200%, BPS, that is basis points below the repo rate. Okay, you got the consolidated sinking fund. I will incentivize you. You may ask me, why should I keep the, consolidated sinking fund? Your rating will go up. My comfort level will go up. I will go out and borrow for you. There'll be investment in your bonds. And also, you can borrow from here at the repo rate. Today, I'm allowing you because there is a corona crisis, virus, economy. You're desperate for funds. I'm allowing you to borrow from your own fund at 200, that is 2 percentage points below the repo rate. Repo being 4, at 2%, your own money, you can borrow and ride it out. That is the consolidated sinking fund, 200 BPS, etc. Repo rate. Whereas it means advances are extended to the state, the rate of interest charged is, all this. Guarantee redemption fund scheme, etc., etc. And when the prelim question comes, it will come from only here. Because this itself is a little ahead of what we should be dealing. But no more, the examiner is looking into, a little elevated level for his question bank. So, let's go to the next slide. Can we? Yeah. State Disaster Response Fund. Why did I pick this? Survey doesn't talk too much about it, but it gives you the trigger, the takeoff point. Immediately you remember the 15th Finance Commission. And then side by side, you recall your virus economy and states and so on. Then what do you have? 3 aspects open up. One is special one-time dispensation. COVID-19 as a notified disaster. You want to spend 100 rupees. See, what is SDRF? What is NDRF? You are all states. You got this fund. I'll give you 75 rupees. You chip in 25. Together, 100. And when a disaster strikes, immediately spend from there. If it is quote-unquote national disaster, which means that from National Disaster Response Fund, you ask me, if I'm convinced, I'll give you money. If I give you money from the NDRF, that will become a national disaster, etc., etc. So how much is okay? You are what? West Bengal. I am what? Kerala. And how much is the SDRF? What is the size of it? The criteria, they are mentioned somewhere. I'm sure not the survey. But as I told you, survey triggered us. How prone are you to disasters? What's your area? What's your population, etc., etc. And based on that, I will decide how much money. Because see, Uttar Pradesh is my darling state. I can't give them more money. Kerala, I don't like. I can't give them less money. There has to be a formula. Please understand. Modernity is formula. You have to go objectively in the case of everybody. But if you go by likes and dislikes, then that will be another disaster. So, and encasing, I heard him talk about it. So I looked into the book and the 15th Finance Commission. There I found the disaster risk index. How prone is Odisha? How prone is Assam? How prone is Andhra Pradesh or Uttar Pradesh or Madhya Pradesh, Gujarat to a risk, disaster risk index? Again, all this earthquake, flood, whatever extent of your vulnerability. How frequently have you been hit by the disasters? And what is your vulnerability? And that is the basis for giving you a rank with the disaster risk index. And based on that, you will get a little more money. Obviously, this is a part of this. The third para is a part of the second para. Remember, here you have, what do you have here? Risk profile of individual states, isn't it? So risk profile is indicated by your place in the disaster risk index. So I thought this could also be a bit of a hit for the every level of the examination. And the next one, the slide. This is making headlines and it kicked in this year. And yeah, on the foreign trade front, this looks a little likely because last time till recently, you know what you had? You had the merchandise exports from India scheme, MEIS, and America challenged us in the WTO, and WTO said that this is a prohibited subsidy, and therefore we had to abandon that. But you have to give subsidy to the exporter. Make no mistake about it. I'm an exporter. There's no GST on the exports. That is one competitive edge I have. Otherwise, I'll be priced out. But then what about the tax I'm paying on petroleum products? A lot of VAT I'm paying. That's quite a lot. And if I don't get it back, I'll not be competitive in the global market. I'll be priced out. The government, we all went to the Honorable Commerce Minister and requested him. He said, yeah, you got a point. Then he telephones the Honorable Finance Minister. And then everyone puts their minds together. And RODTEP is there. That is remission of duties and taxes on export products. And this is apparently WTO compatible. Here, what's the extra that you get? All the central, state, local taxes that are already not credited back, you will get it. And VAT on fuel used for transportation that so far has not been exempted, you will get that back also. Get that back means that will come into your account. You can use that money for paying the basic duty on your imports that you may be needing to make your goods and services, or you sell it to somebody. He will use it, and that's how it is, market friendly, etc. So that is RDTEP, RODTEP. Remember this. This is going to figure. RODTEP. I've seen so many. You've seen also. If I've seen, you've seen. Then where are we? The next one. See, this once again appeals to me from a purely exam perspective, human perspective also, but yeah, exam means human. See, we appealed to the WTO along with South Africa. Sir, it's a human tragedy. Hundreds of millions are suffering. We are 1.4 billion people. Developing countries are hundreds of millions of people, billions of people. We all need the medicine, and we got the capacity to make the medicine. Pfizer made it, Moderna made it, Johnson made it, somebody else made it, Sputnik was there. And we would like you to waive the intellectual property rights. Compulsory licensing will take a lot of time. We don't want legalese here. We want you to give us upfront the right to make the medicines that others have discovered. They have the intellectual property. This is not time to talk of intellectual property because our lives are, in danger. Therefore, do please waive it off for us. We went there. And Pfizer runs the WTO, Moderna runs the WTO via Biden. And therefore, it's a foregone conclusion that they will reject your appeal. and they have taken no decision, but the arguments I have read in the meeting that was held in the month of February, not at all sympathetic to our case, that it be treated as a public health crisis universally, and IPRs be thoroughly relaxed. No, they reject. The arguments are completely outright against us. No decision, of course, has been taken by the WTO TRIPS Council, October 2020. Feb also. We appealed in October 2020, and there have been meetings since then, and they have sort of rejected our appeal. This appeals to me, main and interview for sure, and even in the prelim, maybe something about WTO TRIPS Council, etc. The next one. Oh, PLI. PLI is a household term now. 1.97, that is the budget number. And in the month of March, when it got announced, there was little money was sort of announced for three sectors: mobiles and drug intermediates and medical devices. And later in the month of November, 10 more sectors got added. Today it is 13 sectors. 197 lakh crore, 1.97 lakh crore is the commitment of the government, etc. I have a table coming up. The next slide is a table where you can see which sector got how much. All of them got about 10,000, 12,000, 15,000, 18,000, 6,000, 9,000 crores. But automobiles ran up into the 50,000 plus crores of rupees. So I thought the table is interesting because he may ask you PLI is 5 years, so that's okay. PLI, the benefits are too transparent for him to ask you the question. 5 years is fine, that's one multiple. Which sector got the maximum? That's another multiple. Yeah. And of course, all this is a part of the Atmanirbhar. So can we see the table, please? Yeah, this is the table. Advance. All these are 10 sectors. Together, how much? 145. Add to that another 50. That was there in the month of March itself. These are the 10 sectors of November. So 145 and 50, 190 odd. That is 197. That is the total commitment of the government of India for the PLI, for all the benefits that you are expecting. Hopefully, they'll materialize. And the next one. I like this for preliminary and main and every other level. See, where are you? What's your position in the world? Third largest in the world in terms of volume, behind China and Italy. 14th largest in terms of value. That is the cash that you earn by sort of making these pharmaceutical products. That's fine. And the rest of it, how much is your share in the global production, etc., etc., that is also fine. Global pharmaceutical market is 1.5. You are today at 41. You will be by 24. You will be 65. By 30, you will be 120. All these are projections, PLI, etc., etc. We are the pharmacy of the world, and of course we know it. And it's a part of the PLI. The medical devices, all this we are concentrating. That is fine. So this part of the survey, I like, the pharmacy of the world. We could go to the next. Next slide. Yeah, this is, I'm expecting a question in the preliminary because, see, we have a surplus for a while now. The last quarter of 1920, remember, pandemic had little to do with that. That quarter, you started accumulating. Pandemic kicked in, but yeah, a little bit. But in pre-pandemic, it was all due to, don't blame the virus for this. So, your surplus. How did you manage to have surplus? Basically because your service exports are there. And what is current account? It is merchandise plus Invisibles. Invisibles are services plus all your profits and dividends and rents and royalty, what have you. All together, except your the capital account, the rest of it is current account. Here, two factors have combined to give you a surplus. One is creditable, the other is not. The creditable is the services exports of yours. They are still doing very well during the pandemic also because they are not directly so much hit. And the next one is because you've not been growing, you've been plunging to 4% and so on, even before the pandemic. What happened was that your demand for imports fell. Because if you grow, you require imports. If you don't grow, you don't require imports. So your exports did not fall so much because others did not fall and you kept exporting. But your imports fell because you sort of are not growing at the same level as you were. So exports did okay, imports did not do okay, and as there is this current account surplus. Add to that, of course, your invisible service exports, computer, software, services, etc., etc. And it got worse during the pandemic. After 17 years, apparently, in the current fiscal, that is the last fiscal, you've got 2% of GDP of current account surplus. You know, if you had deficit, what do you say? Basically, what I believe is exam worthy is the next paragraph. That is, it is your current account is a reflection of your saving investment equation. How? You're growing, you're importing a lot because you don't have money within the country. You exhausted all that. You need more. You couldn't form the capital for that. You couldn't produce it in your country. So you're importing. Damn good. Somebody else's savings outside your country that got invested, that went into production. Those goods and services you are importing so that you can add that to your capital as well as consumption side. But if you have current account surplus, what do you say? You say the same thing. You got the current account surplus, that is, you got a little more money, and that you invest in your country to be able to produce what you want and what the world wants. So, either way, the relation between savings and investment is what is reflected in your current account. That's how you figure this out for our purposes. I've been very simple. See, my language is 10th class, 11th class. If you want me to complicate, I can complicate. But that I think is criminal because, a teacher should never complicate. Simplification, declutter is what matters. And tomorrow, if it's going to be asked in the wherever, this savings investment equation is what is the mirror for your current account. That is why I've extracted this paragraph from the survey and then slapped it here because you're required to read it once, twice, thrice, and think about it and get ready for the upcoming prelim question. Oh, why not? Main also. Can we go to the next one? External debt. Why did I pick this? I picked this for 3 reasons, 4 reasons, 5 reasons. So $556 billion is your, external debt. 556. In that, how much is the government debt? 103. 556 and 103, it will be about how much? 19% of the total external debt, 19 is the government. That is very important to remember. That is the government. 19%. And what's the biggest item in your external debt? The biggest item in your external debt is your ECB, external commercial borrowings, largest component. Next is NRI deposits. The third one is your trade credit. That is, you are importing some steel and you will pay them tomorrow. Till you pay, it is credit. And that is a loan actually. What is credit? Loan. You borrowed and so borrowed from them. I'll give you tomorrow. That's loan. Why should I borrow and pay you? You take it tomorrow. Till then, it's a loan. So this is the order. One is your ECB. Next is NRI deposits. NRI deposits, be it dollar, be it, remember this 556 is not, you called it 556 billion US dollars, all right. But a lot of it is not dollar law. It is rupee law. All your FWIs, they come and, they buy your bonds, etc., etc. Quite a lot of that is rupee. Not everything is dollar. Quite a lot of that is rupee. So NRI, ECB, NRI, and trade credit. This is the pecking order, 1, 2, 3. And external debt is this much. Of that, government debt is this much. And I thought that is the reason why I should pick this up from the survey. So that's the latest from the survey, September 2020. And when you talk of a decrease of US 2 billion, it's a decrease that is over and above the number that they gave us in the month of Feb 2020. So Feb 2, September, there's been a decrease. Now, let's move to the next slide. Yeah, this is important. Once again, exam, absolutely. Once again, I have to tell you the survey set the priorities. Survey triggers our imagination about the relevance of a certain paragraph or an item of information or analysis. Having said that, why am I saying? Because, okay, nominal effective and real effective. Nominal is what's there in the market, real is adjusted to inflation. So, what's the takeaway here? The takeaway is, this. So, how do you see where you are going? That is your rupee depreciating or appreciating beyond a certain range? Are you competitive, etc.? So, there is a basket. In that, all your trading partners, depending on the weight of the trade you have with the country, they get some weights, all of them together 100. That is the basket, a classical index. And, you see its progress over a period of time, and you see whether rupee is depreciating others or less than others, appreciating more than others, less than others. And that decides your competitiveness in the global market. If you are depreciating more, it's possible that you become more competitive. But if you cannot handle the demand for your exports in line with the depreciation rate, then you are losing more than you are gaining. So depreciation, appreciation, the exchange rate is only one factor in deciding about your overall competitive. That's okay. So what am I saying here? There is a basket. Earlier, it used to be 36 countries, your trading partners. Now it is 40. Because periodically, they revise it. Periodically, see, the basket needs review periodically. And what's the base year? 1560. Not that 2005-6. So this could be a classical preliminary question. Did survey give you this? No. If you just read a survey, they'll take you to some library somewhere and, sort of burden you with all kinds of research and technical language and absolutely, smoke screen. But here, our job is to be simple. Please, the professor who is correcting you, he cannot and will not accept jargonization at all. So I thought from our perspective, we got the concept. We got the concept. And 40 is the new number and 1516 is the new base year. The rest of it is introduction. You could read this, and if you have anything to ask, you are most welcome. Beyond which, near and rear, purchasing power parity also figures here. Relative R is real, which is inflation out, and N is the market, and between N and R, the difference is inflation, and purchasing power parity also. That is the notional value. How much can my currency buy? How much can your currency buy? And if we is sort of make an equation, how many units of your currency, my currency, and all that, the exchange rate based upon the notional value. We had a fairly thoroughbred discussion on that. Now, next slide. Why did I pick this up? See, there is a popular understanding that RBI gets in to keep the rupee at a certain rate in relation to other currencies. For example, the biggest one of them all, US dollar. No, it doesn't. Tomorrow, if this question comes, is our exchange rate floated or dirty float? Survey doesn't say this. These are the words of survey. RBI's policy, but the headline we have given so that I can help you out on the exam front. RBI's policy on the exchange rate of the rupee has been to allow it to be determined by market forces, float, with interventions only to maintain orderly market conditions. Only order containing excessive volatility in the exchange rate without reference to any predetermined target level or band. Classically, the words of a practitioner of monetary policy. So float, not dirty float. Dirty float is have a band and retain the movement of the exchange rate within the band. Now, we don't do that. Wherever it goes, it goes. If you had it within your control, you wouldn't have allowed it to go to 75, 76. So, that's the policy, monetary policy, exchange rate policy of the RBI. So can we go to the next? Reserves, is it important? It is, of course, important. Look at the facts. You know how important they are. We are after China, Japan, Switzerland, and Russia in terms of forex holdings we have. How much do we have? About 575, 580, that much we have. It doesn't matter how much we have today. Roughly, you remember, you have to, it will change in June. It will change again in September, October. It goes on changing. You will go on accumulating because the world is in love with you. They're printing a lot of money that's coming your way. Now, he will ask you, okay, we got this much forex reserves, break it up. So you got the foreign currency asset, you got the gold reserves, you got the, the SDR of the IMF. I mean, you got the reserve tranche with the IMF, and you got the SDR. SDR is 1.5 billion, the least. The reserve position, the reserve tranche is 5 billion. Gold is 34. And of course, foreign currency, dollar, yen, etc., 535. So a lot of facts are, here. One is you are number 5 in the world. And this is the breakup of the forex reserves of yours. This is as latest as last week. Though I rounded off a little bit, I don't want to strain your memory unnecessarily. 34.123. Who cares? 5.0105. No. That is obscene. So, this is the way to remember. So, next. This is another hot candidate for the, everywhere. Cooperative banks are not respecting the rights of the depositors, safety of the money they park with the bank. Urban cooperative banks. The Punjab, Maharashtra, and a few others. So the government thought, let's go in. After all, it's a bank. We are not going into cooperative society, primary agricultural credits. We are not going. They're societies. They're not banks. Urban cooperative banks are competing with commercial banks. And they are giving so many variety of products. And tens of thousands of crores of rupees parked there. And you don't give a damn to the depositor. So RBI thought they'll crack the whip on these banks. 1,482 urban cooperative banks and 58. The states give them license and stuff. And RBI supervises. There is dual control. It was going nowhere. And this act says that RBI given the power over the management of UCBs. All the management and their amalgamation, etc., etc. And then about the directors also. Till now, till the law became operational, anyone could be a director. Today, you have to have special knowledge, practical experience in specific fields, banking, finance. So that'll give them good corporate governance, and RBI's powers of supervision should ensure that, yes, the money of the depositors is relatively safe. This is, as I told you, another survey reminder, economic survey reminder. Next, Corona insurance products. This I thought is a scoop. Again, survey doesn't talk about it, for God's sake. We thought that Corona insurance, after all, you're going to be a public servant, please. And you are interested in public health, and you have to ensure hundreds of millions have access to medicine and financial, safety, security, etc. There are two, Corona Kavach. Basically it's like this. Okay, I'll pay you premium. And whatever you say, I'll pay you the premium. And if I test positive, you have to take care of me. All that. I go there and I hire a place and doctor, treatment, medicine, whatever is required, all that medicines. That is Kavach. Corona Rakshak is, okay, I think I'll need about 10,000 rupees for getting out of this after testing positive. I may test positive and it may cost me 10,000 to get out of it. And so I will pay premium so that if I do get this, problem, you will pay me 10,000. I think maybe, okay, I'll go to another hospital where it may be 11,000, 12,000, 15,000. Accordingly, I'll pay you premium and then you give me that kind of amount. One gives you the cash for which you pay the premium. Another gives you the bill is picked up by them by this, whatever. They spell out, of course, the devil is a very big devil, is in detail. These are downright crooks. 74% of investment is allowed to them. I think, fingers crossed about what is going to happen. But Corona Kavach, Corona Rakshak. These are the two mandatory. You look at the word here, mandated by IRDAI to be offered by all insurers. They have to be offered, mandated. Hopefully, it will be for the good of the people. Next. Yeah, this is Global Financial Stability Report. Question like they're saying IMF, a situation is stabilizing. Global Financial Stability Report. Yeah, others. Next one. LTRO, TLTRO. I already told you. See, cheap money, long-term money made available by the RBI to the banks so that they can on-lend it equally cheaply to any sector wanting to take money or targeted real estate, construction, etc., auto. That was the recipe for arresting the downfall of the economy and enticing the companies to borrow, enabling money to be borrowed, cheap money, and yes, also enabling that the government bonds do not see spike in the yields because nobody is there. You sell off and yield will go up. Now, there are buyers for the corporate bonds. Yields need not go up. That is how you manage the yield and give them money and backstopped their fall, etc., etc. Longer duration as compared to the 28 days under the LAF, etc. All this. We have seen this. So this was LTRO, TLTRO. Did that help? Survey says the credit did not pick up much. Why will you take credit? You tell me. Will I invest? I've got lots of capacity there. I'm not able to use that. We don't know when is the the second wave, this wave, that wave. Why will I take money? I won't take money for consumption. I won't take money for investment. Neither will I have use for LTRO, nor will I have use for. But companies who are in trouble, yeah, they can float a bond, and if that's bought by the bank, and I'll be able to keep floating. But credit growth did not pick up. Backstop, we ensured that you don't fall further. That is what it must have done. Government security, yeah, that's what it must have done. Nothing great, but expected of the RBI, and they've responded to the crisis. Next, the chapter on inflation and the economic survey. The very next paragraph, they're pouncing on the CPI combined as the anchor for your monetary policy. Pouncing for reasons. I didn't like the misplaced agility about rejecting the CPIC. So I sort of simplified it. 4 reasons. I simplified. Basically, what's the problem? What's the problem of the survey? See, in the consumer price index combined, food is about 40%. And rest of it is, a lot of it is fuel, about 15, 18% or whatever. What the survey is saying is the inflation in the country, the numbers revealed by the CPIC are distorted, misleading, unrepresentative for the 4 reasons. What is it? Great discovery. Food and fuel are supply, and RBI is not in any position to handle the supply side inflation. So why should the RBI bother? As if it's a discovery by the survey, as if others did not know. And then they say people's dietary habits have changed since 2012, and the base year being 12, this being 2021, a revision of the base year is very important to see if the basket has to change, weights have to change. Some go out and some come in, whatever. That's okay, technical issue. So supply side is one, RBI is helpless, outdated. Point number 2, you have to revise the base year. And therefore, they are saying, let's go after the core inflation. Strip the inflation number, headline number of the fuel and the food impact. And what you're left with is what you can deal with, because quite a lot of that could be related to the cash which is going around, the demand side inflation. You should be able to handle that. That's what you are there for. That's the job of the Monetary Policy Authority. But remember one thing, inflationary expectations. I want somebody to stand by me, RBI. They are doing something about the inflation. Whatever they can, they are tweaking around with their, the toolkit, so that there is some reassurance to the people of the country that there is a high-powered body in charge of managing prices. That confidence is very important, point number 1. And there is also, when I go to the market, I pay the headline price. Headline. And so core inflation is only a concept for me, but there is no reality for core inflation as far as I'm concerned. If you're not bothered about the food prices, after all, because there is so much of investment that is going to come up into food processing, etc., RBI will have a great role in responding to the food side of the prices also. Therefore, to completely take it away and leave you with the core, and core being linked to the cash, the demand, that is, core is irrelevant. Headline is relevant. Headline is what touches us. And therefore, RBI, even in the 2021, 2026 inflation targeting framework. It is still the CPI combined and headline, which is what the RBI handles. Rest all is pure academics and not entirely responsible. Inflationary expectations are very important, etc. Next. This is, the economic survey has certain boxes in that they track what is going on, the changes in the public policy, etc. CPI industrial workers changes in its base year. From 2001, it goes up to 2016. Very good. More articles in the basket, wider coverage in terms of sample size, number of centers, markets. How many prices you are collecting, how many centers, how many markets. So from 20,000 maybe to 30,000, I'm speaking worldly, sample size, number of centers, add more centers. All urban, it is all industrial workers, and that is used for your calculation of the DA and all that. And who knows, maybe today, tomorrow, there'll be new base year for rural and agricultural laborers. Maybe it's already happened. I remember having seen, no, they are working on it. It should happen any day now. That should also be, these are classical preliminary questions. And it's already there in my book, beyond which survey also handles it well in a box. This is the revision of base year for industrial workers, CPI. And if we can go to the next. The wonderful description, or you may even call it definition of base effect is, you please read this line. When changes in the CPI, be it CPI or the GDP or GVA, WPI, whenever, 2 points. When change, 2 points in time. When changes in the CPI in the base month have a considerable effect on changes in year-on-year inflation, this is referred to as base effect. What a wonderful way to say. What a wonderful way to say this. So you see, base year 10, on that 2, you went up by 20%. Base year 5, on that 2, you went up by 40%. So the number in the base period, if that has a dramatic effect on the YOY, year-on-year number, you call that base effect. Please look for this. Base year, base effect. Both we have seen. And both of them could come in the exam. One of them could come in the exam. I love this definition. I think they must have taken it from IMF or some World Bank or somewhere. So that is the base effect of inflation. Next. Thalinomics. Go out and bang on the thali asking Corona, go. But last year, just before that happened, thalinomics is, see, this is good. Of course it is good. Thali, the price of standardized, this veg, non-veg, over a period of time, has it got cheaper? How much cheaper? Why did it get cheaper? Demand or supply side? What's been the interstate, progress here? Where has it got more cheap? Where has it got less cheap? All this will show you what to do so that you can supply, cooked food to the people at a reasonable rate. So that's good. Thalinomics, remember dosanomics of Raghuram Rajan. Now, bare necessities index, all this shelter, sanitation, clothing, food, housing, etc. They are the base necessities. And the survey says between 12 and 18, the BNI, bare necessity index, some states, have been able to supply the bare necessities, and some have not been. So learn from the states that have what is cooperative federalism. This is cooperative federalism. One state learning from one federal unit, learning from another federal unit, competitive federalism. And in order to, you compete, but at the same time, you also cooperate, ask them, help me. I would also like to supply the bare necessities like you are doing. Let's compete, but with sharing the knowledge, experience, policy. So competitive, that is why you are calling it cooperative. Competition for cooperation in which there is competition so that you can achieve more in relation to one another. So that's good enough. I mean, what is so bad about it? But all these are there. You got the multi-factor, multi-dimensional poverty index. What is that? This is multi-dimensional. All of them are there. Sanitation is there, water is there, food is there, kind of shelter, flooring, etc., etc. So yes, it's a good thing. Last year you brought up this thali index, showing how cheap or otherwise the thali is, veg and non-veg. And this year you brought out the BNI, basic necessities. Very good, very good. This is how data can be collected, data can be used, public welfare can be addressed in a competitive way. Pretty good. Create a dashboard, in real time. Very wonderful. Nitya, you should be able to take it forward. Next, Residex. Old hat, National Housing Bank in 50 cities. It announces how the property prices are behaving. NHB, that is the Residex. RBI also has a similar one that is about the, residential property prices, etc. But this is NHB, National Housing Bank. Next, this everyone headlined this. Growth and see what is the big revelation here. Say, what is your growth rate? 8%. What is the interest rate? 6%. So your debt is sustainable. If you are growing well and you're borrowing cheap, it means that you are deploying the funds well. The return is good. That's good. Interest rate, growth rate differential, big ticket. So now, but the growth and debt's growth can sustain debt. Debt cannot sustain growth, not the vice versa, etc. Growth leads to debt sustainability and not necessarily vice. Grandmother's economics. What did your grandmother tell you? Borrow cheap, deploy well, generate returns. Even if it is cheap, don't borrow beyond a level. Exactly what these people are saying. And if you translate that into semi-technical language, we should be using, basically what they are saying is growth sustains, borrow and spend. Counter-cyclical. When the economy is going down, you borrow. When it is going up, you have all the tax collections. Why should you borrow? So borrow, spend, get out of the recession pit, and whatever you borrowed, you'll be able to justify. You'll be able to pay it back, service it, because you're creating growth. Growth means taxes, divestment, privatization, asset monetization. All this will give you lots of cash, and whatever you borrowed, you'll be able to return. So, growth should be higher than the interest rate. Growth rate should be higher. Point number one, with all the implications. And don't think twice about borrowing at this time because you need to borrow because you are in a pit. And that is exactly what they're saying. And Kissing said, don't borrow more than 60%. Center and states together, 40-20 by 2023. Already you are hitting at 100. Your GDP is about 3 trillion and you're borrowing about that much. Your total debt must be about that much by now, 93% or whatever. That's because of the virus. Otherwise, we are pretty well behaved. 60% by 23 and casing committee that went into review of the FRBM and its functioning, etc., etc. Regular economics. But then it could be twisted by the examiner to ask a simple looking, indeed a simple question about debt to GDP ratio at that side. He could trick it a little bit, but then if you are clear in your understanding, you should be able to, get it right. And the next one. Oh, India's sovereign credit ratings do not. See, credit rating depends upon macroeconomic fundamentals. Rate of growth, not the potential. Everyone has potential. You have to realize it. And the real numbers are about how you are doing, not how you potentially can do. So this word potential somewhere here is, ability, economic size should be rated, sovereign credit rating, less subjective, all that. So the point here is, you're a large economy. That's okay. Large and small, it doesn't matter. Performance matters. What is your profile, in terms of fundamentals? Growth rate, inflation, fiscal deficit, say interest rate structure, forex reserves, NPA levels, all of them go in. And finally, you get a number, crunch all that, you get a number. And no one is against nobody. For God's sake, I'm not a votary for these credit rating agencies. They are crooks upon crooks. They are non-state actors. But the fact remains that they are so for everyone. They are not singling you out for bad treatment, for BBB, B, small a3, all. No. Survey quite, sort of sad. It says that us and China was singled out in 2005. China was number 5. We are also number 5. But China got A minus. A minus is very, very big. And now we are getting this. They say that we got the potential to repay. We never defaulted, etc. You be transparent and don't be subjective. Economic. Oh, that's okay. They are pretty patriotic, but the fact remains that you can't argue with these fellows. Obama took them to the court. You should ensure that they fall in love with you, but not, argue with their methodology. It's okay, fine. We'll one day get AAA. Why not? And the next. See, economic survey like Deng Xiaoping says, you grow fast, there'll be inequality. Don't bother about it. In course of time, there will be prosperity. There could still be inequality, even then. But inequality is inevitable because of various factors. But there'll be no poverty. Everyone will get the right kind of. But is that right? Yeah, that's okay. Some people become rich today, others will become rich tomorrow or the day after. Everyone will be rich soon enough, etc. But the fact is, inequality is a drag on growth. The more the people under the poverty line, the more the rich guys that could wreak havoc, crony capitalism will come. Public policy will be pro-rich and anti-poor. And the demand will be cut down drastically. Poor people, what do they demand? They can't demand anything. And so inequality is an enemy to growth, enemy to innovation, enemy to stability. So God forbid inequality should sharpen. And of course, the government has plenty of policies to moderate inequality. But the survey has been a little too practical here. Next. That's about innovation. Yeah, it could come. We are into the top 50. I have moderated the language of the survey first since 2007 when the index came, etc. So here, what are the takeaways? Yeah, we are in the top 50. We are the best in Central and South Asia. That's okay. Third among the lower middle income group. All that is fine. All that is fine. But who makes the index? It is made by WIPO along with Cornell and the other, management institute in France. So used by corporates, etc., to level up on their innovation. So that is the survey, I guess, you know, or do we have some more images. That's about exports and imports, if we could have them. Yeah, these are, you see, what do you import most? What do you export most? Which countries do you have trade balance favorable? Which countries you have unfavorable? Looks like a decent entry into the preliminary. You could read that. That is nothing much to discuss here. Can we keep going on the slides? This is about unfavorable. You have seen the favorable, the trade balance, etc. And the next. Yeah, this is what you've been exporting and importing last year and this year. This is 2019. Decent graphics I have given. It doesn't get, you'll get the real numbers. This is April. Fiscal year is over. You'll get the numbers in a week or so, along with the foreign trade policy. A brand new policy will be announced for the next 5 years. You could always update this. Till then, this is about as latest as what you have. Yeah, and the next, I think that's the last, maybe. Yeah. So we'll come back to the very first one as far as graphics go. That looks good on the board. Now, I've got some questions. Yeah, somebody says, please make the slides available. I'll give you the PDF, 5 slides. Everything will be available. Please don't worry about that. It is meant to be available.
So there is a one question which is Q&A box, that is monetary policy measure can be categorized as below the line and fiscal measure
Which
as a.
one? 1 second. Can we get access to today's recorded video? Of course you will. And then you have a question. Then monetary policy, can you put the question Q&A? Yeah, here, yes. Monetary policy measures can be categorized as below. You see, below the line, above the line is for the fiscal. Though, the reason why you got the doubt is most of the monetary policy we have seen is pushing money into the market. That is but that is, monetary policy doesn't come into the picture here at all. It's all about fiscal multipliers, spend the money. Exactly what I said. I thought about it because, it's one thing to lecture to anyone, quite another to lecture to a certain target group with specific exam demands. So I thought about it, and not one word was vague. And you reflect within the 4 corners of what I've given you. What should be done to achieve 5 trillion economy? 5 trillion is way off now. First, we have to get out of this virus economy. 5 trillion regular stuff, whatever you, agriculture you've done, PLI you've done, foreign trade policy will come, you do that also. And then innovation, you keep going, innovate, get competitive. And then the labor codes you implement and create more and more employment with all this. Then you have 5 trillion. LAF now available to RRBs as per Banking Amendment Act. See, Banking Amendment Act 2020 should be related to that urban cooperative banks. It is not about RRBs, etc., etc. LAF is commercial banks. Please repeat. Focus. See, one person is asking CPR. Consumer price index combined, that is rural and urban combined. Today the inflation is, let us say, 5%. If you take away the food and fuel from there, you may have core at 3.5. Looking at the CPIC at 5%, if you raise the repo rate so that less money is available, less demand and less inflation, so that the prices will come down, you know, then you are responding only to food and fuel inflation. You are not responding to the structural demand-driven inflation in the economy. So peg your rate to the core because the core will be less than headline. This is basically the argument of the corporates because they always want the rates low. And the core will quite often be lower than the headline because most often the inflation is from food and fuel. So this is a corporate argument. Don't say that, but that will help you understand better. Views on privatization. See what views when the country is privatizing. All we can say is, yeah, join the chorus and sing praises. Nobody is opposing it. You have to. Government may not even ask you, what do you think of privatization? It will ask you, what are the advantages of privatization? Nothing critical about privatization. You have to go along with it. Chances of having the same weightage of economics questions in this prelim as we had in pre. See, economics goes on. It's all economics goes on. 15, 20, and throw in a bit of a government program also. 21, 22, it goes on. I'm not actually, I've never studied astrology. So how will I be able to tell you about whether 21 will be the same weight for economics? But average 15, 20, 25, who knows? Maybe more. Change in dietary pattern is the reason for focusing on currency. Basically, this is what bothered me also. They are rejecting CPIC.
So, another question is in chat box also.
Yeah. Let me handle this first. I have 2, 3 more to go. After that, you please come in. You see, basically you are rejecting the headline inflation. Then you are bringing in the core inflation. To reject the headline inflation, food, even that food is not really what guys are preferring. Their preferences are something else, and what you're measuring is something else. So we are doubly, there's a damage here in our, sort of calculation. And after that, 4 reasons why the CPIC is rejected. Now you bring in the core, and that's the second paragraph. I don't think that was in line with the government policy. Fundamentals that global organizations need to consider for India's sovereign. See, everyone, the sovereign is the government. Every country will have the same criteria applied. Wherever you land up, you land up. I told you about half a dozen macroeconomic fundamental criteria. You have to assess every country accordingly. No one is singling you out. If at all, they will love you because India is a large country. If you out of turn promote India, that will be good for the world. Indians will be encouraged to open up even more. So they will, given a chance, promote you and not put you down. CPI combined is a headline. You can get the core also from there, but what we get is CPI combined headline. Headline is unadjusted to food and fuel. What do we mean by corporatization? That is, you bring the private sector, be transparent. And in course of time, of course, you could privatize and all that. Not now. Now the board is being corporatized. That is, you bring the private sector people. That's all. And also, yeah, that's all. As far as the ordnance factory is concerned, that's all. Where will the PDO be available? Yeah, please don't worry about that. It will be available everywhere. Any questions left? Yeah, yeah.
No, sir.
Yeah,
There's
there are,
one
there are.
question since.
How do you see Indian economy recovering this financial year? Also, migrant. See, it's a bit bad, not so bad as last year. It'll try you for a month or two, but I think world will not allow you to take your time. New Zealand already banned people from India. The Atmanirbhar package be covered within the survey and budget need not be. What is there in Atmanirbhar? I have already given you lots of details, and more details are there. And I just don't go into unnecessary detail. The reason why I discuss the survey the way I did is because now you know what to look for in the survey and what orientation you must have. People unnecessarily mug up, mug up, all sorts of raddi, pick up and mug up. I've given you a clear idea. And actually, tomorrow also, 2, 3 chapters I'll take up and discuss before we get to the budget. Negative impacts like NPAs by infusing too much liquidity into benefits of new MSME. I already told you if you take it in the form of turnover, then there is no moral hazard. That is, if it is investment, they would like to stay within that investment, never modernize, don't create more employment, and improve the technology, etc. Take away and go for turnover, and that will help them to improve their technology. Infuse too much liquidity into MSME. See, you have to infuse because that is where hundreds of lakhs of people are employed. 4 reasons I have already told you. I chucked all the 4 reasons. So I've simplified it. Number one, base year. Number two, dietary habits and base year. That is number one. Two is, you see, the first reason they have given is, they have means anyone will give you, is, too much of food inflation. Another reason is even that base year and the dietary habits are changing. We are not tracking the right food also. Point number two. And point number three is that, the monetary policy will be distorted if you respond to the headline inflation. Headline inflation being so misleading, regular stuff, nothing new. That's what they have given. And I've simplified it to a great extent in the video. Small. Somebody asked about small savings. In the context of TLTRO, what is specifically invested? See, targeted. I'll give you money, cheap money. With that, you buy the bonds of the companies dealing in auto, companies dealing in real estate, so that they get the money. They can keep floating, or, so that they won't, sink in this crisis. They get the money, you get the money, and you can on lend it. It's all cheap. So revival of the economy, etc., etc. Small savings schemes counted in yields. See, small savings is, how is it yield? It is yield in a sense, okay? It is. eh, See, I have bought a Kisan Vikas Patra. Interest is, let us say, I don't know the interest right now. Let's say, let me err on the right side, 7%, 6.5%. If it's 100 rupee Patra, 6.5 is the interest. And I'm developing cold feet about the government, and I'm not very confident about the government. That 100 rupee Patra, I sold at 90 because I thought 90 rupees is real, 100 is unreal. So I sort of sold it at 90. So the person who bought it at 90, he is getting 6.5 on 90. In other words, on 100, he is getting about 10% more. So he is getting about, say, 7 odd on 100. Yield is more. Why did the yield go up? Because I sold it off out of fear. If there's a lot of demand for Kisan Vikas, the yield will be low. I will sell at 105. He'll get 6.5, you see, percent. You know, he is buying at 105. On 100, he would have got 6.5. That 100, he bought it at 105. So the base value has gone up, the yield has gone down. You work it out. I should get 6.5 on 100. But that 100 paper I bought at 105. So I paid more. And I'll get less interest. The yield is less if there is demand. America, what's the yield? 1%. India, what's the yield? 6-7%. Yield is more when it is junk. Yield is less when it is, rated well. U-shaped recovery versus Nike description. Oh, please, I told you to junk it. Did I chase the swoosh and the Z? I did not. You got the concept. Now you are, pick up a Nike shoe and look at it. Yeah. Please don't take it literally. VUWLK. That's all. And yeah, W. You spend a lot of time on Nike. Any doubt left?
Yeah,
Oh,
sir, there is last question from Vivek also. Why banking regulation?
there is a question
Man.
for me.
So in Q&A box only, which is not live. This
RBI is
last
allowed.
one,
Yeah.
shall I go and read?
Yeah, please.
Why Banking Regulation Amendment Act 2020 is not applicable for primary agriculture banks and societies.
They're not banks. Please, you must have seen the slide. It's applicable only to banks. They should not attach the name bank to the primary agricultural credit cooperative societies. It's not a bank. Urban Cooperative Bank is a bank. It applies to them. That's all. Is
Need
that
to
all?
ask one question also, sir.
Yeah.
There's one question that is for financial year, right? So after that, I have just live that question. So there's one question in that also. This migrant crisis brewing again.
Yeah, I told him things are not so bad
You
this
told
year.
that?
Yeah, I've answered that. I told him that about the outlook for the upcoming fiscal year, the current fiscal year, you know, uh, it's not so bad as last year. Once bitten, twice shy. We can be proactive. And migrants, only Maharashtra, they are going back from. Delhi will go out of its way to respect the migrants. And it will not be as bad as last time. It will not be a fraction as bad as last time. But then even a bit bad is bad enough. Yeah. We have to wait and see. The second wave is, some people are saying it's peaking in the third week, which means it'll go down after that. Let's see where it goes. Nobody knows, but it'll be far more muted than last year in terms of the impact it can make on economy, migrants and all that. So anything else?
Again, one question,
Benefits for
sir.
inflation targeting. You see, we have discussed that. Benefits for inflation targeting policy of MPC. Inflation is the center around which the economy moves, and therefore all the benefits. Yeah. Anything else, please?
No, sir, not as of now. No, there's no more open question. I'll ask the students, and after that, we can go ahead with your
Yeah,
statement.
PDF can also be made available.
Students, if you have, sorry, sir.
The PDF is also available with Sonuji, and yeah,
Okay.
pass it on to the students. So that's it.
For sure, sir. I'll do that.
We are back at 6 for the budget and a little bit more of the survey tomorrow. Thank you so much. God bless you.